You seem to always find things that you deem attractively valued or really way undervalued.
In most markets, that's the case. 99 was a very expensive market, and that's what ushered in 3 down years in a row for the first time since the Great Depression. But I don't think this market is terribly expensive. There's some names in the very high growth sphere, the cloud computing and software as a service, things like that. They're pretty expensive. In fact, some are very expensive in my opinion. But they're the big names in the market, Apple and Amazon and Alphabet, Meta, Facebook. I don't think any of those stocks are particularly expensive. So I think they all offer good value. We own, I think, almost every one of them, and have for a long time.
What's kind of the upside potential? And let's start with Amazon, which you've owned for a really long time.
When people ask me the best investment decision I ever made, I say buying Amazon on the IPO. And what was the worst? Ever selling a share of Amazon. Amazon is it's underperformed the market fairly significantly in the past 12 months, and that's because they're going through a very large capital spending cycle, and the market then isn't sure if they're going to earn above the cost of capital, even though they always have done that in the past. But what's interesting about Amazon particularly, so something like Alphabet's had a great year, and Amazon not so great. But what's interesting about Amazon to me is that if you mark the AWS business, the Amazon Web Services business, to a blended multiple of its major competitors in that area, such as or software as a service, such as Microsoft or Salesforce.com, then what you'll find is that AWS alone is worth almost Amazon's current market cap. We think AWS standalone business is worth about $1.5 trillion. And then the advertising business, which is growing much faster than the advertising business at Meta and at Alphabet, if you give them the average price to sales that those companies trade at, then that gets you about 95% of the way, almost 100% of the way, to Amazon's current market value. So you get the entire global retail business for free. And the other thing about Amazon is that Amazon this year will bypass UPS to deliver more packages in the US or worldwide than UPS does. And UPS has been around 100 years. And Amazon will build more warehouse space this year, 122 million square feet. To put that in perspective, Walmart has, if my memory is correct, 136 million square feet, and Walmart's been around 50 years, and Amazon came public in 1996. So we think that Amazon actually is a very good value here because the free cash flow should explode over the next few years as this capital spending cycle wears down.
You mentioned buying Amazon at the IPO. Another company that you bought at the IPO with very unusual initial public offering was Google. So, what's your current assessment of Google?
It's our second largest holding.
Alphabet, I should say. Yeah.
We like it a lot. It's got a lot of momentum right now in terms of the business. It's a core holding for us, and I think it will continue to be.
So there is such a thing as a core holding, at least at Miller Value Partners.
Well, core in the sense of we've owned it a long time.
Yeah.
And we haven't seen a reason from a valuation perspective to sell it. In some cases where we have sold things that went up a lot and we thought were expensive, Netflix being the most prominent example where, we bought it on the old stock at 8, we sold it at 32 and thought we were smart, and then it went to 300. Then it collapsed to the 50s, we bought it again in the 50s, then it went up 12 times in the next 2 years. And then we sold it after that, and I think now it's up about 10 times since then. So it would have been better just to leave it alone.
Facebook, Meta, what's your assessment of that company at this particular juncture?
I don't have a view about, Mark Zuckerberg clearly has a view about where their future lies, and that's in the so-called metaverse. That's why they're changing their name, this kind of integration of the digital world and the real world. And clearly there's a ton of stuff that's going to happen in that, in that space. I think that the market understands what the issues are with Meta from the standpoint of all of the concerns about the power of social networks, the harm that they've done. I think that those issues are real, but the stock price reflects it. So if the stock price didn't reflect it, I'd be a lot more concerned about it. But the valuations have come in a lot. They still generate a ton of cash. They have 3 billion users worldwide, so no one's ever going to overtake them. And I think that there's, and they keep talking about more regulation, saying they like it, and in a perverse way, part of what more regulation would do for somebody like Meta is it would keep the newer competitors and crowd them out.